So it seems there is a possibility of a SpaceX and Tesla merger. First, it was Dan Ives talking about it. Then Chamath Palihapitiya talked about a reverse merger with Tesla. And now Elon mentioned something with employees about a potential merger between SpaceX and Tesla. So we'll talk about it today. Of course, last week it was all over CNBC. Right now it's still just speculations, but we'll talk about why this could be possibly happen. We'll talk about the pros and we'll talk about the cons. So stay tuned. Welcome to Everything Elon Musk, Tesla and SpaceX. Two of the most valuable companies on the planet share one chief executive, overlapping workforces and billions of dollars and cross-company transactions. Wall Street cannot stop asking whether Elon Musk will fold SpaceX and Tesla into a single entity. The speculation surged after reports that have confirmed Musk had discussed combining the two companies with close colleagues in recent weeks. SpaceX is preparing to kick off its Wall Street roadshow within days ahead of what could be the largest IPO in market history. If combined, SpaceX and Tesla could create a conglomerate spanning rockets, satellites, electric vehicles, AI infrastructure and energy storage valued at roughly $3.35 to $3.6 trillion based on SpaceX's IPO target range and Tesla's current market capitalization. Of course, there's no certainty that this is going to happen right now, but everything kind of points towards a merger between SpaceX and Tesla. Also, Elon Musk has actually discussed folding Tesla and SpaceX together. And this is what happened. Recently, Musk raised the idea of merging SpaceX and Tesla in conversations with colleagues and Tesla employees, saying the prospect has been openly discussed internally. And of course, SpaceX is expected to begin trading on the NASDAQ in roughly 2 weeks, following its S1 filing. I'll leave the video where we talked about exact money and the exact numbers that was in the S1 filing. Now, this is important. SpaceX carries a private valuation of roughly $1.25 trillion following its February merger with Musk's AI venture xAI, a deal that also folded the social media platform X under the same corporate roof, and now targets an IPO valued at $1.75 to $2 trillion. Now, what about Tesla? Now, Tesla's market capitalization sits at approximately $1.6 trillion, making it one of the most valuable companies in the world. However, legal experts cited that the report indicated that a combination would face limited antitrust risk, but significant shareholder complexity around the structure. Also important is that Musk holds 85% of voting control at SpaceX, meaning that the board's resistance to any deal might not be valid. The harder questions involve determining the parent company structuring a stock swap and protecting minority shareholders on both sides of the transaction. And of course, those unresolved details keep it from being a done deal, despite the clear strategic logic driving the conversation forward. SpaceX and Tesla share billions in cross-company spending. Also, the financial ties between the two companies have deepened over the last 2 years, creating transactions that would simplify it under a single corporate structure. Another connection is SpaceX purchasing $697 million worth of Tesla Megapacks energy storage systems in 2024 and 2025 to power xAI data centers, according to the SpaceX prospectus. And remember that SpaceX also spent $131 million on Tesla Cybertrucks in 2025, and Tesla has invested $2 billion into xAI in January of 2026 before those shares converted into SpaceX holdings following the February merger, this prospectus showed. A shared vice president of materials engineering serves both companies simultaneously, reflecting deep structural overlap. Now, I have to say that SpaceX and Tesla do share engineers all the time. Also, both companies are directing enormous capital towards AI infrastructure at a pace that outstrips most public competitors in the technology sector. SpaceX allocated more than 75% of its $10.1 billion in the first quarter capital expenditure towards AI, as reported by CNBC, while Tesla flagged total capex exceeding $25 billion this year. In March of 2026, Tesla, SpaceX, and xAI announced the Terafab, a joint chip factoring facility originally pegged for $25 billion. SpaceX disclosed in a May 6, 2026 Crimes County hearing notice that the first phase alone will cost $55 billion and full build-out potentially reaching $119 billion. And obviously, the facility represents the clearest physical evidence that the companies are converging towards one structure. And if you follow Dan Ives with Wedbush Securities, now Dan Ives sees a 80 to 90% chance of a merger by 2027. Dan Ives, managing director of Wedbush Securities, places the probability of a merger at 80 to 90% with a target completion in the first half of 2027. Dan has called Tesla and NVIDIA the best physical AI plays and frames a combined SpaceX Tesla entity as an extension on that thesis. This is what Dan Ives said on the Swap network. I think that's the step process that they'll go through, and then ultimately a merger with Tesla. He also maintains a $600 price target for Tesla. He argued that the autonomous robotics alone would add between $1 trillion and $2 trillion to the market capitalization. Now, Ross Gerber, CEO of Gerber Kawasaki Wealth and Investment Management, has described the combined entity as a potential Berkshire Hathaway of AI, offering investors a clear AI bet, though he also has raised conflict of interest concerns and argued the deal would resemble an acquisition more than a merger. Now, let's admit that the split captures the uncertainty around the potential combination of Musk's two flagship companies. Prediction markets and Musk's pay structure frame the stakes for investors. While Dan Ives places a merger odd above 80%, prediction markets tell a far more cautious story about the timeline for any deal to come together. Call sheet traders placed only a 33% odds on a merger before May 2027, with the probability swinging sharply in recent sessions. Poly market participants assigned a probability between 17 and 26% for formal merger announcement that would be made before the end of 2026. Of course not. And that's according to Trading Key. Now, that gap between analyst confidence and market pricing reflects genuine uncertainty about whether Musk will follow through on the combination. Musk's compensation adds another dimension to the speculation because his SpaceX pay is tied to the company reaching a $7.5 trillion in market capitalization alongside a Mars colonization milestones. However, a merger that would boost the combined entity valuation would accelerate his progress towards the target and other milestones in Tesla's board-approved pay plan. Analysts cited above, including Ives and Gerber, point to the structure of any stock swap and the potential for dilution of retail ownership stakes as the central unresolved concerns for Tesla shareholders. And of course, institutions that manage large pensions and mutual funds have publicly stated that they would use their voting power against any merger plans that harms retail investors, according to Trading Keys. Now, the positive would be that a merger between Tesla and SpaceX would consolidate two of Musk's massive enterprises into a vertical integrated powerhouse of autonomy, AI, space exploration, and satellite internet. But while it promises incredible technological synergies, it risks operational overload, severe conflicts of interest, and dilution of existing Tesla shareholders. Here are your pros and cons, starting with the positive. Now, the pros are technological synergies. The companies could share vital hardware and software developments. Tesla's electric vehicle and battery manufacturing expertise could help power SpaceX's off-world projects, while SpaceX's Starlink could provide global high-speed connectivity for Tesla's autonomous vehicles and AI projects. Consolidated leadership. A unified corporate structure eliminates the division of Musk's attention and centralizes his capital allocation and strategic focus into a single entity. Now, diversified revenue stream. Shareholders would gain exposure to a broader, more resilient portfolio. This includes SpaceX's lucrative launch contracts, Starlink's internet infrastructure, and orbital data centers, shielding them from the volatile auto market. Now, here are the negatives. The cons are massive execution risks. Both companies require immense capital to scale. Tesla is heavily invested in AI, robotics, and robotaxis, while SpaceX burns an estimated $1 billion a month scaling Starlink and its space ambitions. Combining them could overextend the balance sheet. Shareholder delusion. Merging at differing valuations, especially if SpaceX pursues its planned IPO, could lead to stock dilutions for existing Tesla shareholders, reducing their slice of the combined entity. Extreme complexity. Now, the combined entity would attempt to do everything from building consumer electric vehicles and humanoid robots to launching rockets and training AI, risking an organizational bloat reminiscent of sprawling 1980s conglomerates. Let me know what your opinion is. Are you for the merger? Are you against it? Just leave your opinions down below in the comment section. Also, if you would like to know more about what Chamath Palihapitiya said about the reverse merger with Tesla, you could watch this video now. Anyway, this is Claudia. Thank you so much for being here. Love you guys. Goodbye.